Target shares are taking a hit this morning after the company named a new CEO and reported second quarter earnings that actually defied expectations. Michael Fidelke will step into the role next year after 2 decades at the company. He succeeds CEO Brian Cornell, who will become the executive chair of its board of directors when he departs in February of 2026. The company's quarterly earnings report showed earnings per share of $2.05 compared to an anticipated $2.03. It pointed to $25.21 billion in revenue when just $24.93 billion had been expected. So we are joined now by Akin Oyedele, deputy editor for investing for Business Insider. Akin, thank you so much for joining us today. Target sales, they were up these 3 months. So why the CEO shakeup, and what does it mean for the retailer when it's trying to find its footing in this very changing economy?
Thanks for having me. Well, sales were up this quarter, but the company has actually had a series of challenges going back to the beginning of this year and even last year. It's in the middle of what you'd call a turnaround because there have been a series of, for example, consumer boycotts that hurt sales in the past. The earnings last quarter, even though we were seeing this quarter was up, last quarter was particularly worse than expected. And so this new CEO is being brought on to try to turn the company around. And judging by the way the stock is reacting this morning, Wall Street isn't super confident that that can happen as quickly as they would like. And there's just a lot to be done in terms of rebuilding trust with consumers, rebuilding trust with Target employees. One survey from the Wall Street Journal showed that 40% of Target employees weren't confident about the company's future. So there's a lot of work to be done, and that's why this new CEO is being brought on. And so far today, what we're seeing is that that maybe isn't enough for some of the people out on Wall Street who are more bearish on the company.
All right, let's switch gears now and talk about Home Depot because we saw the company miss its earnings estimates just yesterday. Tomorrow, we know Walmart releases its revenue numbers. What can we expect, and what does all of this say about the state of the economy right now?
Right. I think we can expect Walmart, the largest retailer, obviously hugely consequential. We would expect them to sound cautious, like a lot of the other retailers have, particularly because they are facing the uncertainty of tariffs and they're still grappling with how much prices will go up, when they should pass on those higher prices, if they should, how much they should. So Walmart likely will sound cautious, but we're also seeing a lot of resilience among these companies. Home Depot, for example, their sales in the US were up last quarter. TJ Maxx, which reported this morning, also did pretty well. And I wouldn't be surprised if Walmart's results beat. So we could see some strong results still because the consumers are still strong, relatively speaking, but we could expect them to sound pretty cautious about the rest of the year. And the culprit there is tariffs and the uncertainty that that presents.
Yeah, uncertainty. I hear that word so many times now because of the state of the economy at this point. All right, Akin Oyedele, deputy editor at the Business Insider, thank you so much for your insight.